Well, it was touted as a strategic move to restructure and recapitalise Africa's largest gold producer. 5 days after an announcement, Anglogold Ashanti shareholders told the company in no uncertain terms that they disapproved of a new listing and, more importantly, a $2.1 billion rights issue. This is Tonight. I'm Bruce Whitfield. Tonight we dissect the breakdown in communication between management and shareholders and look at what went wrong. Was that entirely fair? I'm not so sure. Michael Kavanagh is the metals and mining analyst at Noah Capital Markets. He joins me this evening to pick through the announcement. It was a big announcement and it came through, and Srinivasan Venkatakrishnan goes public and says this is what we're proposing to our shareholders, that we want to split the company in two. South African assets in South Africa, global assets listed in London. Seemed like a lovely idea. And on day one, the share price plummeted in double digits. That should have been the first sign that not all was well with the proposal.
Yeah, I think it was the rights issue that took everybody by surprise, and the magnitude of it. $2.1 billion on a company that's market capped at around $6 billion, or so just less than $6 billion, about a third of the value. And I think shareholders probably thought that they're not really keen to dip into their pockets and put more money in at this stage.
No, and here, there are a couple of different issues there then, because one is the company desire to change the structure. The other one is a Reserve Bank requirement. The Reserve Bank says to you, sure, you can go ahead and restructure, but here are the T's and C's, and they apply. Is the Reserve Bank maybe partly to blame for the failure of this restructuring?
Look, one needs to look at these things through the eyes of different stakeholders, if you like. And the Reserve Bank, I think, probably quite rightly insisted that the South African company be debt-free. I think they're very wary of seeing cash flows from South African assets being used to fund offshore businesses.
As has happened for the last 20 years very effectively, yes.
And then unbundle the offshore business and leave the South African assets with the debt. And, you know, so quite rightly they insisted that the local assets be debt-free. Consequently, you know, probably to carry the whole debt burden was too much for the offshore assets, so therefore it needed an equity injection.
But here we've got a situation where the principle of splitting the business isn't a bad one. I mean, if you look at Goldfields and you look at creating Sibanye Gold and putting the South African, well, most of the South African assets of Goldfields into Sibanye, that's been a spectacular success story for investors there, whereas Goldfields International NUB has been less spectacular.
Yeah, no, indeed. I think the bigger principle at play here is the pressure that chief executives are under to liberate value and to create shareholder value. And when the commodity prices are not going in your favor, or a weaker rand, in the case of South African assets, when you feel that you've done or picked all the low-hanging fruit on productivity and efficiency gains, then you need to look at other options to create shareholder value. And no doubt the investment bankers would be having their say as well and giving lots of advice on how to do deals so that they can make their fees as well. But looking at, you know, possibly unlocking some of the perceived rating discount in the international assets would be one way to try and create shareholder value.
Yeah, the shareholders now said, look, we don't mind the value creation, but we're not paying a third of our market cap. We're not going, and you've got big, what's the guy's name? I keep wanting to call him Hank Paulson, but it's not. The other Paulson, who is a significant shareholder in Anglogold Ashanti. When the story first broke, it was, oh, international shareholders are pressuring Anglogold Ashanti. Perhaps they were, but not on these terms.
Yeah, agreed. You know, the reality is with the rights offer is you have to dip into your pocket. You've got to probably go and sell other assets to put the money into the investment in Anglogold, and perhaps it's you know, it was a step too far or too big an ask, if you like.
Hey, and gold price is going absolutely nowhere. If anything, it's going lower in the 1200s or thereabout. It's seen as a hedge against crisis. Crisis, it seems, for now, until the next black swan swims past, seems to have been averted. And investors are very happy to take the foot off the gold pedal, and we're sitting around 1250 or thereabouts.
Yeah, we're somewhat in a sort of a wait-and-see phase, if you like. I think the underlying problems in the world haven't yet been properly addressed, and so there's always this lingering, simmering potential for the next black swan event, if you like. But for the moment, you know, investors are looking more at a case of possibly some rate increases coming in the US. That might put a little bit of downward pressure on non-yielding assets such as gold. And, so it's really a wait and see type of phase. There's no clear direction for gold at the moment.
So hardly surprising then, the global investors in Anglogold Ashanti are saying, we're not going to pay for this.
No, we don't want to put more money into a stock that for the time being is, in a sideways pattern, if you like.
So then what now for Anglogold Ashanti? Because they've made this big proposal. It's a little bit like going on television and taking all your clothes off and saying, now judge me. Is management at Anglogold Ashanti going to be judged like the emperor?
Look, I think they've tried to do something bold and creative, and they've probably now got to go back and do things a little bit more conventional and conservative, if you like.
Cut costs,
productivity,
blah, blah,
generate
stuff,
cash, pay down the debt, deleverage, try and make good old-fashioned positive cash flow.
And which is hard. I mean, we look at the South African mining environment where they're going deeper and deeper and deeper, getting more and more mechanized. You look at some of their mines around Carltonville, they've got to be close to 4Ks below the ground, haven't they?
Yeah, it's challenging. I think Anglogold specifically are not sitting on their hands in this regard. It's quite well known that they're developing new technologies, looking at challenging the mining convention that we've had for the last 70, 80, maybe 100 years now, and looking at doing things a little differently. So they are pretty proactive as a company.
Yeah. And what about platinum sector? I mean, the platinum sector really went through the mill in the first 6 months of this year. This is really an area very close to your heart. We saw the big strikes, and there's been no dramatic recovery in share prices post the strikes. There's maybe a bit of an overhang in Anglo-American platinum, with Anglos wanting to get out of that and closing shafts. Impala's share price has been bludgeoned to below 100 Rand a share. Lonman's under pressure. Finally coming to the party with building houses for workers, all very Victorian. It's a sector under a huge amount of pressure.
There's a tremendous amount of pressure there, and I think the full effect and damage, if you like, or the fallout from the strike is only slowly becoming known now. And shareholders are looking at that together with the platinum price, which has come off, and saying, maybe we need to just rethink what we're doing with platinum shares. I think going into next year, though, if one wants to look at it slightly more positively, we're going to have possibly 1 or 2 years of stability or relative stability in the labour market. Remember, the settlement was a 3-year deal. The first year basically lost to negotiations, or strikes, if you like. But we're possibly going to have 2 years of stability, and there's scope for productivity and efficiency gains if we have some stability, and possibly the companies will start to look a little bit better.
But it feels almost inevitable that the companies are going to be obliged to cut back and to make those efficiency gains. The best way to make efficiency gains in the capitalist world is to cut jobs. 2 problems there. Yeah. We've got a government that doesn't want to allow it, and a very, very tough trade union that's certainly not going to tolerate that sort of thing. So is there hope for share price upside?
Yeah, I think in the platinum industry it's not necessarily a case of cutting jobs. I think it's more a case of being more efficient and effective in the workplace. And if mining teams are underground on a regular basis without disruption, they do become more efficient and more effective. And so it's a question of squeezing additional ounces out for the time that you spend underground. And this is really what we're talking to when we talk about productivity and efficiency gains.
But are we going to see new capital investment? Because here we've got a situation where platinum price is under pressure, the Chinese are sort of moderating their economy, the Russians are under all kinds of political pressure at the moment. There should be some support for the platinum price. It's not there. So the desire for capital investment in South Africa, which has got its own local problems, seems non-existent.
One would think that with the so-called depressed state of the platinum industry and depressed returns for shareholders, that the industry would be starved of capital. And that should be a self-righting factor in terms of supply constraint. But the reality is that everybody has been able to raise capital, and we've seen all the platinum producers in recent years raising capital. I think the one that has lagged...
Pre-strike?
Pre-strike, admittedly, although more recently we've seen the likes of Aquarius and Northam raising money. The one that has been constrained is Anglo Platinum, because their shareholder, or their big daddy, has basically said, we're giving you no more money. Yeah. Whereas the others have been able to go to the market.
Who's reading it right? Mark Kirifani or the rest of the market?
Well, I think there's still an expectation that in the long run the world's going to need the metal. At the end of the day, we'd like to see cleaner air in the cities around the world, and that requires the autocatalysts to be put in place. There is also this potential for fuel cells, which Mr. Friedland, Robert Friedland, is shouting from the rooftops about.
These are batteries. I mean, these are cars powered by battery power.
Yeah, it's battery-powered cars, and the electricity to charge those batteries is generated by a hydrogen fuel cell.
Which requires platinum.
So you use platinum as a catalyst there, and you use it in bucket loads. At the moment, the technology is actually a constraint to the commercialization of the fuel cell, and you're using in the order of 8 to 10 times the amount of platinum that you would in a normal vehicle on the roads today.
This is all terribly optimistic and terribly. We're going to have more hijackings if people steal the platinum and melt it down. I mean, we don't even want to go there in the South African context. But if there is upside, if there is good potential, then why are the share prices as constrained as they are? What is that uncertainty that's keeping a lid on any performance?
Yeah, we've come through 3 years of where we've seen price favorable movements in the supply-demand balance. So we had metal taken out of the market in 2012 with strikes. We then had an ETF launched in South Africa that soaked up another 1 million ounces. And now we've taken another 1 million, it may well be 1.5 million by the time all the beans are counted, out of the supply-demand balance in 2014. And we haven't seen the price react. So one has to ask, if it's not going to react under these circumstances, when is it going to react? The bulls.
Please answer the question.
So the bulls will tell you
yes.
that the surplus metal has been sopped up over the last 3 years, and it's any minute now. And the bears will say that there's still an abundance of surplus metal, and therefore we may have to wait a few years yet.
Where do you sit on the animal food chain?
I'm traditionally known as one of the more bearish analysts in the market when it comes to platinum. But I'm looking for positives away from the platinum price. So as we said earlier, perhaps productivity and efficiency at these companies, operational stability. If you look at mines that have not been affected by strikes, their results are pretty good. They are generating cash flow. They're able to pay their capex and able to pay dividends as well. So if we see some operational stability, then there should be something in it, regardless of movements in the metal prices.
Is it worth buying some Impalas, putting them in the bottom drawer, and forgetting about them for 10 years?
Well, I've still got a sell recommendation on Impala, so I'd be double crossing if I said to buy. But we're certainly the stock is not too far from our target price at 85 Rand. And so probably we need to think about it.
And getting closer on a daily basis. Michael Kavanagh, the metals and mining analyst at Noah Capital Markets. Fascinating insights into the gold sector and into the attempt by Anglogold Ashanti to restructure its business. We thought we'd catch up on a little bit of platinum market news as well. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night.